My toolbar disappears. Here we go. So, welcome everyone to the Youth Finance and Financial Education session as a part of the Community Financial Empowerment Certification Program, Level 2. So my name is Joseph Cecil, for those who don't know me. I am the Financial Empowerment Coordinator for the Office of Financial Empowerment underneath the Office of Resilience and Community Services. This class is being offered as a part of the Community Financial Empowerment Certification Program, and this class is a Level 2 credit. If you have questions about what that means, you can see me afterward for those. Logistically, we are scheduled till noon. That is always a more generous time frame than we need. And please stop me at any time if something just doesn't make sense or you have a question. It'd probably be best to unmute yourselves if you have a question. As I have this PowerPoint up, it's hard to see the chat and the PowerPoint at the same time. So our topics today, we're going to be focusing on tactics and suggestions for engaging youth in financial education, including specifically do's and don'ts, as well as topics to discuss and what to discuss, and resources and curriculums available. So where do you all think most youth learn about finances? What do you all think? Where do most youth learn about finances?
Home.
I'm getting a lot of people saying at home, or they don't. Those are pretty much the two most popular answers, right? And why is that? Well, many children learn about managing money at home. And if that is the case, are the adults at home properly informed and trained? About 63% of the nation's residents could not pass a basic financial literacy quiz. A 2017 T. Rowe Price survey noted that 69% of parents have some reluctance about discussing financial matters with their kids. And a 2011 Charles Schwab survey revealed that of the over 1,000 teens that were surveyed, 42% wanted their parents to talk more about finances and money. So it may be that they're not even getting that information about finances from their home. More than half of the states in the United States do not require high school students to take an economics class. Only 17 states require high school students to take a course in personal finance in order to graduate. According to a recent report of more than 13 million high school students across 11,000 high schools, only 1 in 6 U.S. students received required financial education. Compared with international peers, 15-year-olds in the United States ranked in the middle of the 18 countries and economies that participated in a 2015 financial literacy assessment. A 2016 survey indicated that only 31% of young Americans agreed that their high school education did a good job of teaching them healthy financial habits. Researchers have found that students from 3 states where personal finance was required in high school had lower default rates and better credit scores than students in the bordering states that did not have that personal finance requirement. So the Center for Financial Literacy gave 27 states a grade of C, D, or F on their efforts to produce financially literate high school graduates. Kentucky, we got a C, and only 5 states received an A: Alabama, Missouri, Tennessee, Utah, and Virginia. When it comes to middle school, only 28 states have recommended financial literacy standards, not mandatory, but recommended. So this usually leaves the touch point for financial education to the nonprofit world and the financial institutions. So when we talk about banking with young people, hopefully this discussion may not always be necessary. It's ideal if the youth is already banked. That's the ideal scenario. And it's very important to start a banking relationship early. Studies have shown that children with a savings account are 7 to 8 times more likely to attend college than those without one. And the amount of money in the account had no weight on that ratio. You also may be fighting uphill here against generational and community bias. All it takes is one family member or family friend to have had a negative experience with a bank, and that can spread like a wildfire. People then don't trust banks even if they've never interacted with them. And this can be especially true for young people. If you're advised to cover the why, create the case for banking. Safety and security, that's the main talking point, and it always will be. It's useful to use an example concerning their home and the financial institution. For example, if they keep their money at home and the home catches fire, what happens to their money? Or if they keep the money in the bank and the bank catches fire, what happens? The FDIC can be a tough thing to explain to young people and what it actually does. So I usually interchange it with the government. It just makes it simpler. It's important to explain the importance of a good relationship with a financial institution. I say financial institution, that's the term I'm used to. Feel free to say whatever comes natural. And this is where I like to use, the story or metaphor of, don't we all want our own home, our own car, maybe start our own small business? Well, I mean, how many people do we know that can do that with the cash they already have? A lot of people are going to need help. And that help comes a lot easier if you already have a good relationship with a bank or credit union. So a good thing to also do is try to look for what's good in a youth student account. There usually isn't a monthly fee, and if there's a yearly fee, it's very low. There usually are few requirements, especially a very low minimum account balance. They should have good interest rates to incentivize savings. And you can also try to explain the concept of parental controls and alerts, that their parents or guardians can have information about their account. I think there was a question in the chat. Maria asked the advantage of credit unions. Normally, I don't go into banks versus credit unions. The differences with the young people. In terms of what are the advantages of going with a credit union versus a bank, is that the credit unions tend to be smaller, so the customer service tends to be better, and credit unions tend to have less fees and requirements, and the fees they do have tend to cost less. So you can use like these comparison charts here to just maybe do an account comparison activity or have them research it on their own. For the things that they need to be looking for when differentiating between bank accounts at different institutions. The big ones here, like this left side, these tend to be the logistical questions. Where's the branch located? Can I get there without needing a ride? What are the hours? How many forms of ID do I need? Do my parents need to come with me when I visit? And then you got over here are the account fees and questions. These are the things we tend to not ask and then get hit with fees and wonder where our money went. So what I tend to cover is I go a little bit, Maria, into the difference between banks and credit unions, but not massively, like I would for adults. I go into basic banking actions, deposits, using ATMs, reading a monthly statement. You can cover checks if you want to, but to be honest, checks are a dying way of paying for things, and especially with youth accounts, it's not going to be something they're going to have access to. Maybe do that account comparison activity. Kids love activities. Young people love activities. The differences between debit cards and checks. And especially hitting on online and mobile banking. That's a big topic I cover, specifically safety and security. Also, it's good to cover what an overdraft is and how to avoid it. That tends to be the main way people get sunk using bank accounts and have negative track record, is that overdraft piece. So we had another question. Hold on, the chat's malfunctioning for me. Is it better to provide a savings instead of a checking to start a youth with? Trisha asked that. Is it better to provide a savings instead of a checking to start? I think most of the time, I believe if I'm wrong, most youth accounts are savings accounts. Most youth accounts are gonna be savings accounts. They are gonna have debit card privileges, but I believe the majority of youth accounts do tend to be savings accounts versus checking. And what's better, I always push the savings over the checking for young people because that starts to incentivize that savings behavior. Again, and maybe if you've just logged on, if you have not put your name in the chat as a form of a sign in, please do so. That's how I'll be able to know who attended today. But there's an elephant in the room when it comes to discussing banking with young people. When most youth go to get that first account, they're going to need an adult with them to co-sign for the account. These adults are the custodians of the account, since the youth cannot enter into a formal contract with the financial institution. While this makes sense on paper, it also gives the adult or guardian, custodian, full access to the young person's account, which unfortunately can lead to questions and opportunities of abuse and theft. Unfortunately, it is a possibility, and I've seen it become a reality. Adults, the custodians on the account, because they have access, they can just go withdraw the money. And it's very sad, but it is a reality. It may not be something you discuss with the young person, but it's something you should know about if you're going to be working with young people. So in terms of savings, it's important to create a savings habit early on because it's a habit above all. Even if we're just saving $1 per week, it's important to get that ability and that habit across. Maybe work with their parents or guardians on setting up a savings incentive. You know, for every $10 they save, the parent, guardian, family member will kick in 5. Something like that. Creating those incentives to build those habits. Depending on the age group, it's important to talk about setting savings goals and savings plans. Preteen and younger groups, you may just want to focus on a want, a game, a toy, something like that. With teen groups, you may be starting the bigger savings plan conversations, like savings towards a vehicle or starting their savings nest egg. And at the end of the day, a basic savings plan is just focused on these 4 things. What do we want? How much does it cost? What is my time frame? And how and where am I going to save? Those 4 things just make up a savings plan. How much is the cost? How much time do I have? Where am I going to save it? You can even add in another question is where's the money going to come from? If you're working with a youth on a savings plan, make sure to have frequent check-ins. Set goals that are realistic and easy to achieve. You know, set a weekly goal towards a month-long goal and so on and so forth. This breaks it down into a much more manageable activity. You know, don't just tell a young person you're working with, I want you to have $200 saved in 6 months. Break that down as small as possible. It makes it easier to achieve. And you can celebrate when goals are reached to reinforce those habits. It's important to discuss the power of interest in terms of savings, especially when it comes to using that benefit that the bank's going to give you for saving money with them. Though it's small, that incentive can help build up what you're saving. There are programs out there to help with this called Children's Savings Accounts programs. These programs work to create universal savings accounts for all children in an area once they are enrolled in kindergarten. The accounts are seeded with a certain amount of money, and as money is deposited into the account by adults, there's usually a match from the program as well. The money in the accounts can only be used for future post-secondary education and vocational training. This is where that fact, the stat comes in, that studies of the existing children's savings accounts programs out there show that a child with a savings account is 7 to 8 times more likely to attend college than a child without a savings account. And again, that was without any notion for how much money was in the account. That's because it helps to create a college-going mindset. America Saves is a resource out there concerning saving. It is a national nonprofit that focuses on savings through digital and technological assistance. When you pledge, America Saves will send you detailed information on how to reach your savings goals and remind you of the amount that you chose to save. In order to enroll as a saver, individuals have to commit to a savings plan that identifies a savings goal. You will also receive monthly challenges to save, as well as information and advice to help you get to your goal. Additionally, you are encouraged to interact with other member savers, learn from their experience, and exchange ideas. Well, you may be thinking, what's this got to do with young people? Well, that's because America Saves has a branch, America Saves for Young Workers. This is a program to support and motivate young workers to use direct deposit to save part of their pay through their first-time work experience. This program likes to partner with summer works programs, those first-time work programs. America Saves provides employees with the motivation to save part of their paycheck through a short, all-electronic program. The America Saves provides ongoing support, information, and motivation through regular emails and text messages. So it's an entirely digital touch. The youth employment programs provide direct deposit, and the America Saves for Young Workers program to their employees. And financial institutions partner by providing no-fee, low opening balance accounts for youth employees to save. So when we talk about credit, it's important to get across the basics of credit. That it's the basic being it's borrowing money now for goods and services you're going to pay for later. Also, a side note, I will be sending this presentation out to everyone who attended today, so don't feel like you may have to write everything down word for word. They shouldn't be accessing credit until they are after 18. And it's important to make sure if you can access the credit profile of a young person you are working with, you make sure there is no credit under their name before they are 18. You can access anyone's credit report for free at annualcreditreport.com. And there's only one way, unfortunately. If there is credit on someone's account who is under 18, or if it was put in their name before they were 18, unfortunately, there's only one thing to do right now. That is file charges. And that is one of the worst discussions I've had to have with a young person, is telling them the only way to get this taken off your credit report is to file charges against that parent, that guardian, or that family friend or family member, because that is the majority of the time the person who is doing that, who is taking that young person's social security number and using it. So what I cover concerning credit is the differences between loans and credit cards, secured versus unsecured credit, who all is checking credit and why it's important to have good credit. This is important as this really hits the why, in terms of why we need good credit. Quick notes about credit reports and credit scores, not too in-depth. And what to do if they receive that credit card in the mail. Namely, rip it up, destroy it. And I'll cover that young person's first experience with credit is likely to be student loans. It's important to instruct them to only take out what they need and understand the terms and conditions. Maybe go into a little bit on the differences between federal and private student loans. They're going to have 10 years to pay them back after graduation, but they should look at the different repayment plans that exist. Especially in today's economy, the federal student loan programs have offered many different ways to pay back what you owe, and possibly even explain post-secondary options that exist outside of colleges or universities. Young people may also be offered secured credit cards as their first credit experience. Secured credit cards, for those unaware, are where the applicant must put up an amount of money that is set aside as collateral against the credit card. That collateral set aside, that money amount, is also the monthly spending limit of the credit card. The cards are usually used for 12 to 18 months, so the user can prove they handle a credit card responsibly. If they show that, they will likely be graduated to an unsecured credit card, and if they do not owe any money on the card, that money set aside will be returned to them in full. If they do owe money, or if they max out the card and never pay it off, they've agreed to give up that money to the creditor, who will not have lost a cent on that credit card. So you can also explain credit by, saying we all want things in life, like the home, a car, open our own business. But it can be important to establish that having good credit can make it easier to acquire those things. And still early on, that good credit is about paying off what you owe every month and only using credit cards on necessities you already pay for. People get into trouble with credit by using it for things they already could not pay for or afford. So in terms of budgeting, depending on the age, you can start with the value of money here. The younger the group is, the more likely you are just to go into the basics of money. I usually like to compare budgeting and planning to spend your money to other activities like building a house or taking a vacation. If we don't have a plan, how can we accomplish what we want to do? So budgeting has two main steps I outline: knowing where our money has gone and making sure we know where we want it to go. This can mean having them or introducing a spending tracker and then creating a budget. And this is where you can have a great discussion on needs versus wants with young people. Making sure, especially, we don't overspend on a need and make it a want. But when I discuss budgeting with young people, it isn't so much specific templates or documents, but just breaking it down to a basic math problem. It's money coming in versus the money going out. It's income minus expenses. Most youth, though, obviously don't have enough in terms of expenses to really create a budget. But it's getting the basics into their mind. You can also explain what happens if you don't pay your bills on time, the penalties and fees that can mount. You can also break down the three parts of a normal budget. Your income, your expenses, and your assets. Or to the young people, I usually focus on savings. You can also choose to introduce some financial technology here. Mint.com is a great financial planning and tracking app. It's completely free. It's going to ask you to connect all accounts and cards that are open. I've never had a security concern in the 5+ years I've used it. It'll track your spending for you and create a customized budget. It'll also include bill alerts and a free credit score. Depending on the age of the group you're working with, you can also cover a little bit on paychecks. Make sure they understand what taxes come out and why. You can tie in banking here and having a safe place to keep that pay. Also, this is not so much for the youth, but for you as the worker, is dealing with hole in the pocket syndrome. Money comes in and we immediately spend it. This is especially true for younger people. It's like there's a hole in their pocket. You got to work with them on setting aside some of that pay. If younger than working age, maybe discuss starting their own side business. Cutting lawns, babysitting, performing odd jobs for the greatest type of pay of all: cash. You can even engage parents or guardians here to change the mindset. If they give them an allowance, to giving them a commission, to achieve or do certain things. If it is appropriate, you can also dive into some small form of career counseling. Talk with the youth about, what type of career they might want to have or vocation they might like to follow. Maybe discuss some of the differences in trade schools versus colleges, and use that as a tie-in to the student loan discussion. For teens and young adults, the older group, the top three topics that tend to come up tend to be paying for college, moving out on your own. And in terms of moving out on your own, we're going to discuss the importance of credit. Because that landlord, that person they're going to is going to pull their credit. And they may need a minimum credit score to get access to that apartment. And what it means to rent and all of the cost associated with it besides just the rent. Utilities, security deposits, things like that. Maybe explain a little bit about what a lease is and what happens if you break it. The penalties that can happen from breaking a lease. The final big topic for teens and young adults, how to get a car. We're going to look at the role credit may play. Maybe looking at the options for payment. Do we just want to save up the money to pay it off all at once, try to do that, or look at getting a loan? You want to get the car checked out, and you want to understand, again, all the expenses that are going to come with having that vehicle. Gas, insurance, maintenance, parking, all those different things. So what are some resources? Start Smart. This is Bank on Louisville's Youth Financial Education Curriculum. This is the other program I coordinate as a part of my position as the Financial Empowerment Coordinator. Bank on Louisville is part of a nationwide initiative to help get people out of the payday lending and check cashing cycles. And we offer a variety of financial education resources, with Start Smart being one of them. Start Smart was created in 2014, and it's modular, with modules on introduction to banking, credit, budgeting and spending, and understanding your paycheck. We've had over 1,000 participants since the debut in 2014. Bank On has been invited to speak in Washington, D.C. at the request of the Consumer Financial Protection Bureau due to the Start Smart curriculum. I've been told over the years that we're one of the only, if not the only, local organization in the nation that has created their own youth financial education curriculum. And we can train people to utilize this if you would like to. So in 2018, the Kentucky legislature made completion of a financial literacy class a graduation requirement. So yay, good news. HB 132, House Bill 132 made that a requirement. But no structure was set up for what the requirement would be, when it would be necessary, and who would facilitate it. So right now it's still kind of sitting out there in the wind. HB 139, this new bill would set up the Financial Empowerment Commission, a group which would be tasked with developing and implementing plans to improve the financial literacy of Kentucky. So other resources, the Kentucky Youth Career Center, they provide educational and career opportunities, as well as job search assistance for young people 16 to 24. They offer GED courses, career and college fairs, an internship academy, and leadership development programs. They also were a certified Start Smart facilitator. They have 3 centers that serve residents in 7 counties, those listed here. Youth Build, low-income young people learn construction skills through building affordable housing for homeless and low-income people in their neighborhoods, and other community assets, such as schools, playgrounds, and community centers. They're an education, job training, and leadership program that provides low-income young adults 18 to 24 with opportunities to realize their potential. Youth enrolled with Youth Build alternate weeks of classroom work and hands-on training if they still need their GED. The Mayor's Summer Works program, this program is likely the first opportunity for employment for youth who enroll in it 16 to 21. Since 2011, more than 23,000 youth have been placed in jobs by Summer Works and its employers. Youth either enter a subsidized role with the Louisville Metro government or an unsubsidized role with a private employer. Youth are screened to see what their interests are, and there are employer fairs to help connect people. Private employers include Thornton's, Norton Healthcare, and GE, among others. The FDIC has their Money Smart curriculum that has an entire module for young people. The modules are broken down by grade level. You can download these resources for free, and there are train the trainer guides. They also have a curriculum for young adults aged 12 to 20. The CFPB has a wealth of free materials and curriculums and booklets, but unfortunately none that are specifically youth focused. And Practical Money Skills, their website also offers free curriculums and games for youth of all ages. So what are some lessons and tips for working with young people on finances? The classroom workbook style can be tough to utilize. Interaction and real life scenarios have bigger impact. For example, many banks offer bank tours, help explain how the bank works. And that's a great field trip. The young people, they love games, interactive activities. I cannot emphasize that enough. Try to let the youth direct where they want to go. Let them decide what topics they most want to learn about, and this will benefit you as a caseworker by keeping their interest longer. And celebrate milestones. Reinforcement is key, especially the younger they are. The more you can reinforce these positive habits and skills, the better. Please also make sure the conversations and topics are appropriate for where you are in the relationship with the young person and their education and comfort level. So a hint, it may not be best to launch into talking about adults using their credit day one. Also try to make sure you understand clearly what you are facilitating. There's nothing worse in terms of young people, especially groups of young people, than not being able to clearly explain what you're trying to get across. That just creates a disconnect and it creates confusion. Please also remember this is not about having all the answers, but helping young people get started on the right path with the right first step. Don't feel like you have to have all the answers and utilize the experts and resources out there. There's Bank on Louisville to assist you. Financial institutions, they tend to have youth programs and youth educational curriculums out there as well to assist you. Use financial technology where appropriate, but beware that young people especially may just need a friendly face to help them walk through these initial steps. And like I've mentioned many times, youth financial education is most about establishing good habits and laying the basis for good financial management. So wrapping up, any questions I didn't cover today? All right, seeing none. If you would like any copies of Start Smart or would like to get trained on it or have any certification program questions, please reach out to me at that email there. Our next certification class, our final one for the calendar year, is a Train the Trainer on the CFPB toolkits they have, December 7th from 10 a.m. to noon. That is one that will likely last longer and closer to the noon time frame. I will leave my contact information up there. If you have not already put your name in the chat as a form of a sign-in, please do so. I will be emailing out the presentation today and a post survey a little bit later today. And if you do not have any other questions, comments, or concerns, I want to thank you all for attending this morning, and you are free to log off and head out.
Hey, Mr. Cecil, this is Rodney Webb. I do have a quick question.
Yes, sir.
Yep. So I work with the Louisville Urban League. I work to serve young people in after-school programs.
Yes,
And
sir.
we have a 16-year-old who recently got a job at Chick-fil-A and got her first paycheck. And
Yes, sir.
she was told that she couldn't cash it because she doesn't have an ID. I didn't get exactly like which bank she went to or if she went with her mom, because I just thought about the slide that you had where it has a parent guardian to cosign on
Sure.
the on that first account. So I just wanted to see, like, should I reach out to the DMV about getting her an ID, or is it just asking her specifically what bank she went to and
No,
going from there?
she will need an ID.
Okay.
To utilize a check, you are going to need an ID, especially if you're trying to cash it.
Okay.
You may also want to ask what institution they went to, but the first things first is they're going to need some form of ID.
Okay. What's the best way to go about getting the ID?
Probably just getting like a state ID, just something there. There are ID cards out there.
Uh-huh.
It's been a while since I've had to deal with one, But there are
Mm-hmm.
just basic IDs out there, basic state IDs.
Okay. So just go to the DM, just go to your local
Or
DMV and
just research it on the internet and see
okay.
what comes up. There used to be Kentucky ID cards. They're the
Okay.
vertical ones, and they were just meant to be the basic of basic ID cards.
Okay.
I worry about
Okay. Got you. All right. Thank you. I appreciate you.
You're welcome. Trisha, if you're still here. Oh, she may not be listening.
Yes, I can hear you. I'm sorry.
Yes. So you mentioned your question about the level 2.
Yes.
So we have 2 levels with the certification program. Level 1 is done through a Google Classroom.
Yes, I completed that.
Yes. So you're good there. Level 2 is just attending 3 separate level 2 classes of your choosing.
Okay, well, I've attended budgeting and spending, reentry and recovery, dealing with debt, banking, and then today.
Okay, so then you have completed level 2.
Okay, so is there like a certification that you send out or?
There is a certificate. I will just make sure it's correct in our database because
Okay.
unfortunately the level 1 Google Classroom does not like automatically send me a list of people who have completed it.
Okay.
But yeah, a little bit later today you should be getting a certificate email from me.
Okay, all right. Sounds good. Should I email you like the dates that I attended each class or
Oh
no?
no. As long as you
Okay.
were as long as you signed in, like put your name in the chat or I wrote down your name, that's not
Uh-huh.
necessary. I have a
Okay.
database I keep.
Okay, all right. Sounds good. Thank you so much.
You're welcome.